Good afternoon and good evening, everybody. This is Dennis Will with the Active Trend Traders. Welcome to Making Money Trading Stocks and ETFs for Friday, the first Friday in August 2018. I don't know if Michael's going to join us or not, but if he does, we can plug him in later. I want to remind everybody that all the materials, he's probably enjoying the summer there in Austria, as he likes to do. He does a lot of, he likes to do the drones, and so he flies those about around the castles and all that kind of stuff, and he shoots out some really good, interesting videos of that. Anyway, hey, all I'm going to show is we do present are for trading purposes only. Traders should always paper trade any new method prior to the risk of their own personal capital. Past performance is not an indication nor a promise of future performance. There's a little bit about me. I'll go ahead and turn the video on so that you can see, yes, I am live. And I don't know if that turned on or not. There we go. And so, yeah, we're experiencing hot and humid weather over here in Hawaii, too. The trade winds did start blowing today. My wife and I are on standby with our go bags packed. Dennis Jr., who lives in South Korea, he and his wife are due to deliver a grandson to us in the very near future, like any time. And so we're programmed and planned to head for South Korea. So we get to experience some trading from South Korea, and I know the time difference is a little bit different, but we'll still continue with, I don't know if I'm going to do the actual Friday webinars when we go back there, because of the time differential. I've got to take a look at that. As I look right now, let's see, in Seoul, it would be 3 o'clock in the morning. And so I don't know if I'm going to do it. I may just record the sessions after the market's over. So one of the things that just really impressed on me over the past week or so, basically the past month of July, is, always buy wholesale and sell retail. That's what, it works in commerce, but it also works in stocks and options. The problem is due to a lot of the mechanisms with the way we trade, and I think the big driver on that is FOMO, the fear of missing out, can basically drive us to pay up for our stocks in our option trades, and we get closer to buying at wholesale, and then when the prices turn back against us, oftentimes we are left with nothing more than to be able to have to get out at retail. So in other words, we've either gotten into the position at retail and have to sell it at wholesale, but we wind up paying too much, and just a little bit of attention, a little bit of strategic planning will keep us from getting into that issue, and a little bit of control of our own FOMO, fear of missing out, can help also. So how to make money trading stocks. Our objective is a timely, actionable intel review at the end of each week. We take a look at market review, mixed, right now we're mixed, very reactive over earnings and tariffs. As you've seen, any type of little news hiccup, and the market just goes nuts. We've seen it also in the earnings reports. The example being, of course, Facebook. The example being Netflix. And then compare that to Apple, which, round up getting a very good report, and the stock was very much rewarded. So we'll take a look at stocks ETF performance. Here's where we're sitting as of about 9 o'clock this morning. And for about the month of July, July has just been a tractionless month for me personally. We entered the month at up about 20%, and we're coming into August up about 20%. The markets have done basically the same thing. We continue to add to our amounts, continue our strategy 3 continues to grow, strategy 2 continues to grow. challenging with strategy one. It's just the way it's been throughout this year. Our go, no go table has been very successful, continues to be successful. This is our premium members get this. Identifies where to take action during a given week, then apply the active trend trading rules for getting in and getting out. A couple of ones we were looking at, Tesla, of course, had earnings on the first, and Tesla had a really good reaction. It was up over $50 there for a while on the first. We were able to, clear a little bit of profit on that, just a little bit, about $94 for the week. BABA, we got in, got out on that, a little bit of profit on that, and now we're waiting for BABA to have earnings. That's primarily what's driving our focus right now, is just the earnings trades. S&P didn't do anything this with an S&P, which is normally typical with during the week of the Fed. The Fed reports out, you never know which way things are going to go. As we saw, we did not get a lot of volatility with the Fed with this meeting. The Fed reported right in line with what everybody was anticipating and expecting, which was no rate hike. And they were fairly tame about their comments. And so the market, it was interesting. I was online on the market when the Fed came out, and I mean, it was hardly a hiccup. And so, at some point, the Fed is going to do something and the market is going to react. Those of us who've been trading for a while remember the Alan Greenspan days and some of the earlier Ben Bernanke days when the Fed would report and come out with their statements and all that kind of stuff, and even with Janet Yellen, and the market would just go, would violently react. And so we haven't seen that a lot here over the last, for probably about the past year and a half, 2 years. I saw that manufacturing jobs were up again. And so, matter of fact, the growth projection on manufacturing jobs, it's the highest growth rate on manufacturing jobs in the United States and since 1995. That's pretty impressive. That's, what is that? Is that 20 years, 30 years worth of, 20 years worth of, a little bit over 20 years, best growth trajectory. So I do want to remind everybody, I am going to take a look at a chart of gold, and I want to explain what's going on with gold. Gold is just, I'm sitting there just wringing my hands over where's the gold trade that we can, we've been able to count on almost year after year after year after year. And this year it is late. It is late. And so normally it bottoms, last year it bottomed in the June time frame, last part of June, first part of July. This year, it's questionable whether a bottom is in place yet. But we'll, as I said, we'll take a look at that. And so here's a little bit of presentations and events on the horizon. There is a Bay Area Moneymaker meeting via webinar tomorrow. So if you want to join in on that, we're going to be talking about the psychology of you, and then also going through some trading drills. Show you how to do drills so and practice trades where you don't lose money. I like that. September 13th, I'll be in the San Jose area, Silicon Valley Option Groups. We'll be doing a presentation with those folks there at 6 o'clock in the evening. I'll put in the address a little bit later on. Then on the September 15th, we'll be in San Jose at the Masonic for the regular Bay Area Moneymaker meeting. And then, of course, every Wednesday night, we have our premium training session for our premium members. And it's where we do technical and technical training, weekly training every week. And then here's what I'm working on busily on 2 different things. One is this one, re-recording and redoing all of our getting started training videos that, for our updated website. And then secondly, my son, who's an excellent trader, it's so funny, my youngest son's almost 39 and he's 38, and gosh, where did time go? But anyway, he's an excellent trader. He's going through and he's working on some enhancements that are going to be conversion to as we convert over to the market action points service, which we replace in the early warning alerts. I'm really liking the initial indication on this. It's eliminating a lot of the whipsaw that we've seen with EWA, especially after a huge downtrend and all that kind of stuff. It always does a great job of identifying the bottoms, EWA did, but the whipsaw was very frustrating. So market action points or maps is eliminating a lot of that, and it's also providing secondary, we're redefining it, so we're going to provide also secondary entry points so that we can capture some of those other moves and not just let them sit by the wayside while we're waiting for the next, early warning alert trigger to trigger. So really pleased with that. So let's get in and look at some charts here. Let's move that guy out of the way. There we go. We'll start with the SPY and the S&P. As we can see, weekly on the left, daily on the right. And as we can see, shorter term, we are pushing back up towards the daily high, about 284-ish. Haven't made it up there yet, but that but then it's got another high over here up at and this is the past all-time high. It's not making it up to there yet, which is up at about 286.63. And so right now it's staying right below this level. Interesting little pattern here. It's kind of a, if you'll notice this, it looks a little bit like a inverted head and shoulders. Left head, little wonky shoulder right there. And the neckline kind of along there. It's kind of broken the neckline already. And so, S&P, maybe getting ready to at least go up here and re-challenge its old highs, and we haven't gotten really we got a good turnaround back in earlier in the year, back in the February time frame, another little bounce in the June, July, or the April time frame, and now we've just continued to pull back a little bit, then thrust higher. And I'm anticipating, S&P, until it shows it's not going to do that anymore, we need to be looking at trading the bounces off the moving averages, either on the weekly and or the daily basis. Now, that's the S&P. It is moving up towards old-time resistance. What about our buddy Qs? Okay, emulating the NASDAQ itself. A little bit different story, as you can see. Yes, we're bouncing off the 50-day moving average. We're moving higher, but we've run into resistance right here at the 180 level, which is where the sellers came in previously. Sellers came in last time up here at the 181-ish level to the 180 level and pushed prices back down. If we fail, okay, if price action fails to get back up to these highs, this would be a failed attempted rally, and we could get a rollover to punch back down and retest. And it doesn't mean that we're, I don't want to say that it means that we're going into a severe correction, but it could give us a more significant corrections and maybe pulling back down more towards the 100-day moving average, or just in between the area between the 50 and the 100. So that's what we're looking at with the Qs. Just a lot of mixed signals. Negative divergence here, certainly on the weekly. And then we get over to IWM. And IWM, what that's looking at right now is it looks like it is giving up the lead. It had been one of our lead indexes for, everybody since about the, it was catching up. It didn't do much earlier in the year, but around June, it started running higher, and it did. It outperformed during the June into July timeframe, held up very well. But as you can see, now we're starting to set up a series of lower highs, one lower low here. And then this candle, if we finish today with that particular candle, let me blow this up for you. There we go. That is clearly a dark cloud cover. It's a cousin to a bearish engulfing pattern, and it is and where is it happening at? Well, we've had a bearish cross on the 820 moving average. Yes, the 50-day has held. However, each one of these attacks on the 50-day has resulted in the 50-day starting to lose a little bit of its upward momentum. Again, what do we have over here? We came up and made these highs here. A little bit of negative divergence on the weeklies. But in the bigger picture, of course, we have to also look and say, hey, as you can see, the trend is still up. And so the anticipation, of course, is, we can pull up back all the way to that trend line. And that's when the indexes would be looking really scary. I don't want to buy this. And then we get a rebound from there. I was looking at, just real quickly, and I want to jump to this right now, is I was looking at, let me find it. There we go. I was looking at my presentations and talked about seasonality. And as we go in here, and I just want to bounce through the S&P. The pinkish line up here shows what the S&P tends to do between August and September going into October. It tends, as you can see, it tends to not do a lot, kind of move sideways, moving 1 to 2% max, maybe 1%. But just a lot of noise, a lot of chatter, not a lot to get excited about. When does the S&P or the index start to get interesting again? Is in the latter part of October. Well, what about our buddy NASDAQ? NASDAQ does a little bit better, but as you can see, NASDAQ also a little bit wishy-washy, sloppy-choppy during the August time frame. Then September tends to be also one of those, September tends to be the weakest month for all the indexes. And so that's the season that we're going into. We want to be very careful because, about trying to get any larger size upside position, because until we actually catch a bid. One of the things I've learned with the gold trade is, dadgummit, yeah, the seasonality will work. However, the wait for the dadgum reversal signals is just the big thing that I take away from this year's trading in the gold area. So seasonality tells us what NASDAQ. NASDAQ, around the first part of October, tends to start running. And so we'll be looking for that if we get a significant pullback. And then last but not least, of course, is Russell. Russell can go on a little bit of a run from the first part of August up into the mid part of September. Then it pulls back. And just remember one thing is that, and we may be seeing a little bit of this, this first part of July, August timeframe, where it shows a tendency to pull back every year. That's what we could be seeing with the Russell right now. Then again, a little bit of a push up, pull back, and the Russell has a tendency to have a larger percent run from the October through the December timeframe. So just be aware of that. So let's see what else we want to take a look at here. I want to chat really briefly about the deal with gold. Here we go. And this is a comparison chart, and these are both weekly charts. And what I want to highlight to you is the one on the left. Okay, the one on the left is the dollar index, the dollar index. The one on the, the one on the right is the dollar index. The one on the left is GLD, GLD. And typically gold and the dollar are inverse of each other. And as we can see, if we look here at, and I'll highlight this area right here, that area of the dollar where the dollar reversed and started moving back up corresponds with this area here. And maybe if I just put a little square there, there you go. This area here on gold. And shortly after the dollar started heading up, what did gold start doing? Heading down. Matter of fact, it went from 127.50 all the way back down here to where it's at currently, at just slightly above 115. Now, as you can see, dollar is in a box at, approximately at past resistance level. Gold has gotten down to a past resistance support level. So if the dollar rallies up, if the dollar rallies up from here, gold is going further down from here. Is going further down from here. And so, again, it's one of those situations where all the signs are there that gold should turn around. TSI, well extended. That golden line you see down at the bottom, that's the lowest it's ever been with gold, TSI. So that is a very, very oversold condition. The other flip of this is, let's say the dollar has reached its apex and is going to basically, and let's say we get some good, well, I wouldn't say good news, but some news that the market interprets as good for the tariffs and the trade talks, and that it's not going to be the bloodbath that we thought it was, and the dollar tanks and the dollar goes down. Well, guess what gold's going to do? It's going to reverse and go up like this way, this way. Two areas on the chart I want to highlight for you. This was back at the beginning of 2017 when the dollar fell. That corresponds directly with this area here where gold started a rally that has gone on for, that went on for a little bit over a year. Pretty dramatic. Now, it is not a one-to-one correlation, but it's enough that we need to be aware of the correlation. Another aspect, if we roll back to the dollar chart, to right here is the beginning, is July 2014. The dollar rallies. Let's roll back the gold chart to July 2014, which corresponds with right here. Look what happens. I'll give you the corresponding time frame here. Okay. July here, July here, and gold had already been in a downtrend at that time frame, but dollar really goes on a strong rally. Gold rips to the downside and correspond, it basically stays that way until you get a little bit of a relief here, rallies into the end of the year like it normally does, but then as soon as it hits, but then pulls back down. And this is April, which corresponds to about here. And as you can see, here's April here, here's April here. Dollar fell, gold fell also. So in that time they were in connection with each other. So as I say, it's not always a one-to-one, but it's a rule of thumb. Dollar's going up, gold's going down. So I hope you found that beneficial. And I will share. And so if it's a great idea to have this. And I'm doing this on a weekly chart, the side-by-side comparison. And the way I set it up just for FYI, is I unlink it so it's not linked to any watch list, and then I can show two different, and I can do comparisons of, see if there's any correlation. Is there any correlation on FANG stocks or whatever, between them, and you can do that comparison. So. Good little tool to have to be watching over the weekend. So one of the other stocks, I'll just throw it out there. NVDA. Earnings are coming up. And when are earnings going to be here? Earnings are going to be here around the 16th. Here's what I'm looking at. We got to, it was unfortunate that this happened the week of the Fed, but we got a nice little bounce up, bullish engulfing over several days. Very powerful move on Thursday. Am I doing that right? Yeah, I am. So very powerful move on Thursday. However, it hasn't, and so I'm looking at any type of a pullback down into the moving averages might give us an opportunity to set up for a pre-earnings run. The other one I'm looking at, which I'm not as favorable on this one simply because it is a Chinese stock and it's just not behaving well. And that is BABA. BABA has earnings. BABA reports also on the 23rd. And I'm sorry, NVDA reports the 16th, which is a little bit over 2 weeks from now. And so it still has enough time to put in a nice pattern for us. BABA has the same thing where it's about 3 weeks away on the 23rd. Reports before market opens, and the 23rd, August 23rd is a Thursday. So we want to. So again, I'm going to stay looking for a potential pattern. But right now, guys, this is not in an uptrend. It does not fit my criteria to want to be doing a pre-earnings trades on it. Short-term downtrend, a sideways pattern. So that's what I'm looking at. And I'll just throw one more out there. Tesla's kind of like the same type of thing. It got into a little bit of a downtrend. Wasn't really a great setup for a pre-earnings trade, but it basically just it surprised people with their earnings reports. It's still burning cash big time, but apparently Elon Musk was very nice to the analysts, and so they gave him above average passing grade, and away we went. Bam, jumped up here, over $50 move from the close. As you can see, about 53, 50, about $50 yesterday. And so we can, that was my wife saying goodbye. She will be back though. So I'll be paying attention to this. The analysts have given Tesla a new upside price target of 385. Tesla, just a little bit of information on it. It's one of the most heavily shorted stocks. And so this move up, once this move up started, because it is so heavily shorted, it's became a self-fulfilling prophecy, and the shorts were getting squeezed. They have to turn into buyers, and therefore then the other buyers went along for the ride, and it pushed the price on up. So anyway, okay, guys, that's what I've got for this this evening. I hope, or this afternoon. I hope you've seen some things that we will find interesting. One of the things, I think Gary shared it with us earlier. One of the things that also may be pushing the period on gold going up, of course, is the Indian wedding season is a little bit later this year than in past years. I think it gets started on around August 15th this year. And so that's when we may see the trigger. However, I'm not doing anything with gold until I get a solid reversal candlestick. And that's the story I'm sticking with, and I'm going to make that. It's a commitment I made to you guys and also myself. No more messing around with it because it disappointed us this year. I mean, it disappointed us, and it disappointed me big time. So, with that, let me go back to. Let me go back to here, and I'll just say, hey, keep the egg growing. Trade wisely, trade profitably. You can reach me at either of those places on Facebook or Twitter. We'll be getting ready at the top of the hour for the final hour. And so until next time, have a great weekend. Aloha, trade well, and prosper. God bless, my friends. Have a good afternoon.